Hi, my name is Darren Joseph from HCJ.tax, and we're the team that seeks to demystify that sometimes confusing world of international tax. And today I want to talk about Singapore offshore companies. I want to talk about 5 things that you want to keep in mind as you consider Singapore for your banking or corporate structure. So, for those that have seen our videos or visited our website, you know that we've been based in Singapore for over a decade. And so when we talk about Singapore, it's more or less from a first-hand perspective and considering the experiences of our clients and our colleagues and others in the professional services space. And the first thing I want to talk about is the namesake of this video clip, which is offshore companies. Technically, Singapore doesn't really encourage offshore companies. And what do I mean by that? If it is that you want to set up a company with no real substance or connection to Singapore, then that's not something that Singapore would be very receptive to. I think that sort of offshore company structure is more in line with what is on offer from Hong Kong. You know, Hong Kong does have an established regime where, yes, you have to do an annual audit or whatever, but once they check and you have no connection, no substance, no activity in Hong Kong, the proceeds or the profit would be free from Hong Kong tax. So that exists. It's a thing in Hong Kong. Singapore, not really. If it is you're setting up a company in Singapore, it must be for a legitimate commercial reason to do with Singapore. You want to be operating in Singapore. You want to be holding assets in Singapore. But to just have a company that does nothing, that just does nothing and just sits there dormant, and with the hope of not paying any taxes for activity that may be taking place somewhere else because the activity needs to be taking place somewhere else if it's not in Singapore. That's perhaps not an arrangement that sits well with Singapore, but you'd want to clarify that with your preferred Singapore service provider, a qualified service provider, because that is a sort of gray space that's not really encouraged. Maybe a few decades ago, yes, but today, I don't think so. Number 2, banking is tough, but hey, banking is tough everywhere. What makes banking in Singapore super attractive is that you have the indigenous 3 banks, the big 3 in Singapore, which whenever you're looking at a ranking of the strongest banks in the world, they are there. They're definitely, depending you're looking at the top 10 or maybe the top 20 banks in the world. They're strong, well run, well regulated, relatively decent service and offering sophistication. But as a result, they're hard to get into, demand and supply, right? Talking to a colleague recently, and one of the big 3 made a decision that they're basically kicking out all accounts controlled by BVI companies. So the point is, don't expect it to be easier than certain other jurisdictions. Banking in Singapore is tough. Number 3, aside from the big 3 indigenous banks, there are other banks that operate in Singapore. For example, banks from Malaysia that have a license to operate in Singapore and so on. And the criteria for onboarding may be a bit more relaxed. I mean, in terms of the due diligence or whatever, it's still going to be on par, but they perhaps will take accounts that the big 3 would turn their back on. But of course, the same question needs to be asked and answered. If you have no real connection to Singapore, if you do not live in Singapore, if your company is not operating in Singapore, if there's no regional HQ in Singapore, global HQ in Singapore, if you have no staff in Singapore, if you have no assets in Singapore, why do you want to bank in Singapore? That's something that needs to be asked and answered, not because you've seen someone talking about it on TikTok or whatever. That is not a legitimate question, but do you have a legitimate commercial reason for wanting to bank in Singapore? If the answer is yes, then absolutely, I'm sure that you'll be more than welcome. If the answer is no, I think you probably want to explore other options. Number 4, there was a huge money laundering case in summer 2023, which we've spoken about in other videos, as well as articles on our website. As a result, Singapore takes its global reputation very, very, very seriously. So a number of laws and rules have been passed and enacted since then, which make it even more. Singapore was never a soft touch, but of recent times, it is even more difficult to set up companies, more difficult to do banking, more difficult to do commercial activity in Singapore. So again, it's not that Singapore is not open for business, but if you're not established, if you have no real connection to Singapore, no genuine commercial reason for operating in Singapore, don't expect to have an easy time, especially with this notion of a purely offshore company. Last but not least, number 5, Singapore is expensive as a result of the recent challenges in Hong Kong. Again, as I mentioned before, Singapore is the beating heart of the financial world in Asia. So they have a lot of choice. A lot of people want to get in, a lot of people want to invest, a lot of people want to hold their assets in Singapore and so on. So understand demand versus supply. And because the demand is high, the cost of doing business in Singapore is high. Rents are high, office space is high. Service providers in Singapore charge a premium for their service because it is a premium jurisdiction. It is not an offshore jurisdiction in the sense that you see maybe on some movie or somewhere else in the social media space. It is basically all the bells and whistles that you would expect of the financial ecosystem in London and New York, let's say a more comfortable climatic zone. So that's it. Just those are 5 things I wanted to comment on as we've been dealing with increased client inquiries into Singapore. My name is Darren Joseph from HCJ.tax.